There's so many lies out there, at least mistruths or half information that are probably keeping you from buying a home. You've probably heard some of them. I gotta have 20% down to buy a house. I have to have great credit. I can't have any other debt. These are just a couple of these myths. In this video, I'm gonna debunk 7 of the most popular myths out there that may be keeping you from accomplishing your dream of homeownership. Without wasting any more time, let's jump in and share these myths. Before I give you the 7 myths of what are keeping you from buying a home, of things that just aren't true, let's talk about why these even are out there. I like to talk about a little bit of information is oftentimes more dangerous than no information at all. Whether it's a quick TikTok video or your uncle or your parents who haven't had a mortgage in 30 years, all these things compound to a lot of misinformation out there. We're going to share 7 specific myths out there that might keep you from buying your own home. Mortgage is specific to your needs and what you need. It is not a one-size-fits-all. Working with a true professional, they're going to gather all the information and find out what works for you. So be wary of blanket statements across the board. It's customized to you and your needs when you're working with a true professional. As an example, one of the biggest myths out there, in a recent Freddie Mac survey, 60% of renters believed that they need 20% down to buy a home. It simply isn't true, and that's a great example. Speaking of that example, that is number 1 on our myth list. You do not need 20% down to buy a home. We often do mortgages for people with 0 down, 3% down, 3.5% FHA loan. Conventional mortgage was 3%, 5%, 10%. 15%. There are all kinds of options that do not require 20%. I oftentimes talk to clients who feel like they're going to wait to save up more money. Sometimes it makes sense, but honestly, if we're watching house values appreciate 3%, 5%, 7%, 10% in some markets per year, are you even able to save up as fast as appreciation? Or are you chasing that ball going down the hill that you're just not going to catch up to? So here's a great example in facts dealing with hard numbers. Last year, the average down payment for a first-time home buyer, you ready for this? It was only 6% down. Myth number 1, not true. So let's take some real numbers on trying to save more for a down payment. Let's use some simple, easy math. Let's say household income with 2 buyers buying a home together is $100,000. And if they're buying something below the median price in the United States is above $400,000. So let's say they're buying a house below the median price of $300,000. A lot of these areas that are below the median house price are seeing rapid appreciation because there's an influx of people moving to different parts of the country that they can afford a home and they can work remote and there's different job opportunities. So a $300,000 house, let's say it has a conservative appreciation of 5%. 300,000 times 5% is $15,000 of appreciation. But if this household is trying to save more of a down payment after paying taxes, insurance, rent, school loans, everything else, do you really think they're going to be able to save an additional $15,000 in that 1 year? Likely not. In many cases, again, it's not one size fits all. You're better to get in with the lower down payment, capture that $15,000 appreciation using a smaller down payment to get in and own that property and ride that appreciation wave. Second myth, you have to have perfect credit to buy a home. Flat out not true. Give you the extreme example, we do FHA loans on a regular basis with credit scores as little as 580. Now, that doesn't mean if you have a 580 credit score and you haven't paid anything on time forever, you're going to get a mortgage. But if you got a 580, but you're on a trend and you've had good recent history, or maybe you have 580 because of a medical issue or a divorce or some catastrophe that affected that credit, if you're on the path of improving things things and heading in the right direction, you can do a mortgage with a credit score as low as 580. You might instantly think, well, I'm going to pay excessive fees and really high interest rates. Here's the thing with an FHA loan. If you qualify for the FHA program, you pay the exact same mortgage insurance at 580 as someone at 640, 680, 700, 720. You pay the exact same mortgage insurance, same down payment, and very similar interest rate. So outside of an FHA loan, it is true, with better credit, you will get better finance terms. An example would be, let's take someone with a high credit score. Generally speaking, when I talk high credit score, I'm talking 740 and above. Someone with a 740 credit score using what's called a conventional mortgage will have a lower interest rate than someone at a 720 credit score, a 700 credit score, a 680 credit score, and so on. The difference in many cases isn't huge. It might be an eighth of a point interest rate or a quarter point interest rate. Maybe a difference of $30 or $40 a month on a $300,000 house, give or take. There are exceptionally low interest rates for exceptional borrowers, but even borrowers with lower credit scores are still available. And at the end of the day, the spread isn't as big as what you think it is. I'll also tell you this, when you're working with a true professional early in the process, they can give you some advice to move your credit score in a direction where you can get the best loan option. The advantage is time. If you talk to a professional early in the process and you understand your credit score and what options are available for you today, but also what options will be available if you improve your credit score, and you can take away some key tactics to drive that score up in the short run. Myth number 3, I have to have zero other debt. I can't have anything else out there. I can't have school loans. I can't have car loans. I can't have anything because I wouldn't be able to buy a house if I had other debt. That is simply untrue. There is a thing in the mortgage business, same thing in buying a car, same thing in a lot of other consumer finance out there, is your debt to income. How much debt do you have that you have to pay every month? And how much income do you have coming in? As your debt load comes down, it frees up more opportunity to use for housing. So debt to income is very important, but it does not require zero debt. Some debt is okay. You cannot be overburdened with an immense amount of debt that you can barely afford and then expect to go out and to buy a house. But let's be honest, most people in the United States are carrying some credit card debt. When we calculate credit card debt, we use the minimum payment that's required on that credit card to qualify you to buy the house. No one wants to pay minimum balances on their credit card because you're never going to pay it off. But from a calculation purpose, we only use the minimum amount required. There's a number of rules around auto loans. If you have an auto that you own and there may be less than 6 payments left in that loan before you own it free and clear and you don't have to pay it anymore, oftentimes we can exclude some of these debts from your debt to income because in a very short period of time, that auto is going to be paid off. You no longer have that obligation. Myth number 4, the only thing that matters when financing a home is the interest rate. And I will tell you that is simply untrue. And I'll also tell you, at the time of shooting this video in 2025, we are probably in a phase that interest rates are going to start coming down. Well, what does that mean? I should probably wait because interest rates are going to come down because that's the only thing. That's the most important thing. In my professional opinion, as interest rates come down, more buyers are going to enter the market. When more buyers enter the market, when there's a scarce set of resources, meaning in many markets, there's not enough homes, as interest rates come down, values go up because more people are chasing after those houses. My strategy with most of my clients right now is get into the house, pay as little cost associated with the particular interest rate, get in, own it, keep our fingers crossed that we're going to see interest rates come down in the next 12 months, 18 months, 24 months. At some point, I believe interest rates will come down a little bit. Does that mean wait? No, it does not mean wait. It means get in, pay as little cost as possible, and look for an opportunity to refinance this mortgage down the road. If you don't know what refinancing is, a super high level would be this. If a lender is going to lend you money at 7%, and you paid it on time every single month for the last couple of years, and the new interest rates are 5.5%, well, you paid the 7, your credit's gotten better, You likely have more equity in the house. Of course, they're going to allow you to refinance to a lower interest rate. You do have to qualify for that refinance, but that's an opportunity that may come up at some point down the road. Warren Buffett has been famous in a couple quotes that I absolutely love. One of my favorites is, be greedy when others are fearful, and be fearful when others are greedy. When I see information out there about there's a housing crisis coming, interest rates are high, all this stuff is looming, I'm going to wait until interest rates come down. I want to tell you, this is the time you should be looking. If you can afford the payment, if you are looking at a house, if you're looking at long-term being a homeowner, as rates come down, house prices will go up and continue to go up. Get in. The rate is like third or fourth down the list of things that are important. The house you buy, the value you pay, that asset you own is forever. The interest rate, while locked in, will never get higher, always has an opportunity to go lower, but you will never have another opportunity to buy that asset at this price again. Here's another big myth. If I have student loans, I can't buy a house. Or I must pay off all my student loans before I buy a house. The mortgage industry is highly regulated. There are specific rules on what the lender uses to qualify you to buy a house. It is based off of your loan balance and your minimum payment. Similar to a credit card, you can absolutely buy a home with student debt. It has to fit into your debt to income. The same way if you had an auto loan, the same thing if you had a credit card loan, the same thing if you had student loan debt. And I'll be honest with you, I look at credit all day long. If everyone in the country is waiting till they had their student loans paid off, I'll tell you what, we wouldn't be doing many mortgages and not many people would be buying a home. Myth number 6. I'm self-employed. I work a gig job. I don't know how I could get financing. Honestly, it's a myth. There are plenty of people that are self-employed that own their own home and got a mortgage to do so. Yes, there are certain rules. How long have you been working that gig job? How long have you been self-employed? In some cases, someone who's been self-employed for as little as 1 year could buy a house. It gets easier at 2 years. There is nothing wrong with being self-employed. I applaud you for taking the plunge and being self-employed, and in the long run, you will not be penalized. You'll likely be rewarded. More risk, more potential reward. It's the same thing with a mortgage. Once we see that there is a stable income, and we know you're going to make at least this much money every single month or every single year, you will be able to get a mortgage when working with a professional. Will it take at least 1 year being self-employed? Yeah. Will it take 2? Possibly, but it's not impossible. My suggestion is find a professional that sets you on a path to be a homeowner. Little conversations like, I'm looking at filing my taxes this year. Is it more important for you to write everything off and pay as little in taxes? Or is it more important for you to own a home and show that income that you did earn? There's a season for everything, but working with a professional is going to help you understand your numbers and your total financial package to help you become a homeowner, even if you're self-employed. Myth number 7. I am passionate about this one and probably get some haters for comments, whatever else, but I'm telling you this, the truth is told over a long period of time. And this one, number 7, drives me nuts. I am going to wait for home prices to come down before I buy a house. I can tell you, being in the mortgage space for 22 years, being an active investor and literally owning hundreds of rental properties, there is only one time that home prices depreciated over a period of time of more than a week or 2 or a month or 2. And I don't think I'm going to see a period like that again in my lifetime. I will tell you this, as I say in all my videos, there are lots of different markets around the country, and no two markets are exactly the same. When I pull up headlines, I see house prices coming down in Austin, Texas. Oh my God, I better not buy because house prices are coming down. In this specific case, you're talking about a market that's seen appreciation of 5, 15, 20% year after year after year. And guess what that decline was in prices? Oh, a 5% drop. Something's run up 100% and doubled in a handful of years. And the headline is house prices drop. Get a little further, next paragraph, 5%. Every market's different. My professional opinion, there are not enough houses in the country. It is getting more expensive to build. We do not have enough people in the trades. There's a scarce set of resources. Getting in and buying and riding that appreciation. Will house prices flatten? Sure. Will they go up 3% one year, 5% next year, 10% one year? Will you have a market that if you had a big run up, you see a pullback a little bit? Of course you're going to. But to wait for house prices to fall is a mistake in most markets, in my professional, educated opinion. So we've gone through the 7 myths. What do you do now? There's a phrase that I always have hated, my truth. I don't think there's my truth. I think there's the truth. I believe the truth in 7 myths that we've debunked those. So walking through these, maybe one applied to you, and what do I do next? I'll give you a couple things to look at and a couple things to consider. First of all, look at your income. Do you have good, stable income? I think that's huge to take a look at your job, your position, where you at. The next thing is, how is your overall credit? Have you been paying things on time? Do you have some credit established? The next thing is the big thing. Where do you want to be in the future? Do you want to be a homeowner? Do you see yourself living in a particular area for an extended period of time? I do not think you should buy a home if you only plan to live there for 1 year. Many homes I've lived in, I've only been in for 1 year, but I don't think you should go into something that you're only planning on living in a place for 1 year. You have to have appreciation build up on that house. And when you sell, there are costs associated. There's transfer tax, there's title fees, there's realtor fees. So if you plan on being in a spot for the next several years and you're ready to jump in, I think your next step is to talk to a true mortgage professional to see what works best for you. We talked about 7 myths, and every single candidate is different. Every single loan is different. Every single person is different. Finding someone that you feel you connected with that's looking out for your best interest and setting you on a path to be a homeowner. I look at mortgage professionals the same way I look at attorneys and financial advisors and everything else. There's good ones and there's bad ones. There's awesome ones and there's junky ones. Finding someone that you connect with that's going to help you hit your goals is probably your next step if you think homeownership is in your future. If you follow my videos, you see what I'm all about, maybe I'm the right guy for you. I'd love to have a personal meeting with you. Get a hold of me and my team. We'll schedule an appointment to see if I can help you in your goal of homeownership. The link is in the description below. I'll see you in the next video.